Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the August 12th, terrific Tuesday edition of today's Money Masters show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone is off to a great start of their day out there. Let's make sure that you and I, that we do everything that we can to have a terrific Tuesday. Now, my outcome during the next hour, well, it's to share with you extraordinary tools that help us to identify where price is headed to. Those include the A to B equals CD tool, what we like to call the lightning bolt pattern. We'll look at Fibonacci expansions and retracements. We'll take a look at candlestick patterns, the signs that the bulls and bears, or candlestick signals, I should say, Japanese candlestick signals, the signs that the bulls and bears make for you and I each and every day. This is an interactive show. It's a call-in show, so you're welcome to give us a call. I'll do what I can to assist you and identify where price is headed to on your stock chart. As well, you can share with me your views about the market. Our call-in number is 877-927-6648. Internationally, it's at 727-445-1044. And together, you and I, we can go hunting for bulls and bears. So this is Terrific Tuesday. This is TFNN. I'm Steve Rhodes, and welcome to the show here. Right now, we've got the Dow is a good question. There we go. The Dow is off 14 points. NASDAQ off 5. S&P is down about 2 points out here. So let's begin with the S&P 500. It looks like I've got a little bit of well, I know I've got a data feed issue. I got a number of issues, but I'm going to overcome them. We're going to take a look at price and see where things are going to. So we're going to start off today. We're going to take a look at the S&P Cash Index. What do we know about the S&P Cash Index at this time? Well, number one, we had a nice bullish engulfing candle that formed out here on August the 8th as the S&P was making a low out here. Made its low. The S&P did on Thursday, August 7th. The S&P futures contract, as you know, made its low on Friday's session out here. So we got a bullish candle. I don't even have today's feed. Oh, man. Okay, that's a problem. No wonder. So it's an issue that I'm taking a look at. I'm looking at yesterday's close out here. Okay, more problems than I realized. Let me see what I've got going on the futures chart out here. Well, I can tell you what it is that we want to pay attention to. Let's go take a look at retracements out here. We're going to do that. Let me switch over to this. Give me a moment out here. Thought we had things up and going. Let me switch over to a different chart tool, just easier to draw in the retracements for you so we know what it is that we are going to take a look at out here. Maybe, but this is not going to have it either. Okay, well, let's take a look at, boy, talk about a full-out fumble out there. All right, let's take a look at the S&P. I've got at least yesterday's data for us to look at. So let's take a look at that. Let me switch over to that stock chart out here and give you an idea of benchmarks and areas for us to focus on and pay attention to. There we go. Let's take a look at the daily chart. So right now, it looks like the daily chart, we've got the S&P. It's trading right around the 1936 level. 1936.60 is what showed up on my screen out there. And if we take a look at that and we take a look at retracements, really the retracement that we've seen so far in the S&P 500, really not too shabby. The question is going to be, is this forming an A to B equals CD to the downside? In that case there, we take a look at a couple different retracement levels. Was it yesterday's candle session? I don't really know. If we do take a look at yesterday's candle session, it was a bounce to the 0.382 retracement level. That's all that we see in the market out here. We'll draw in the pattern. If we see so I'm going to give you both the bullish case and the bearish case. That's going to be the easiest thing for me to do. If we take a look at the bearish case, if yesterday was the high out there, then it's setting up for one large A to B equals CD to the downside. That's assuming that it can take out the lows from August the 7th. Those lows being 1904.78. If it takes that out, your 1-to-1 A to B equals CD to downside, it gives you a price projection of 1858. But the reality is at 1858, I don't think that's where price would stop if, in fact, yesterday's high was the high out there. Instead, I think what it really sets up is more like a 1 to 1.272 A to B equals C to the downside, maybe even 1 to 1.618. 1 to 1.272 takes us down into the swing point low from April the 11th out there, and that would really become our next benchmark. That's if, in fact, the S&P, if the markets are making a move to the downside. At the early stages of this game, and I wish I could give you what the net advancing issues were inside the New York Stock Exchange, but if you've got them, what you can do is you can go take a look at the if you've got the access to it, what you're watching for today, the end of today's trading session, number 335 or greater, net declining issues, then we've got problems in the marketplace. Then the wider swath of the market, the New York Stock Exchange, which gave us bullish signals yesterday, will have failed in one day. And that is even less than a one-hit wonder out there. And that will carry with it a sign that the bears are still in control of the market. They have been inside the New York Stock Exchange since July the 10th at a minimum. Might have been July 7th, I believe, was when they actually took over control. So we want to take a look at that. So the bullish side would be that we see a reversal. That doesn't mean that we're totally out of the woods, or the market could be totally out of the woods on any kind of additional move to the upside out here. We got a flat market today at this stage of the game. Thank goodness, because it makes it a lot easier for me to just take a look at some historical or yesterday's charts in order to be able to give you an idea as far as what's going on. So what the message of the New York Stock Exchange was yesterday is we've got an uptrend that has begun. And that began Friday morning early when we got that key reversal session inside the S&P, inside the ES-Mini, inside the NASDAQ. Out there, the Russell 2000 had already made its lows several days earlier. So that would say that the next move up inside the S&P 500 ought to take us to the 0.618 level. That would be 1958. The real key for the S&P is going to be, can it clear the top of the session from July 31st, 1965.14? This is when all the damage was done in the market. You eliminate that one day's trading session out there, and you don't have much of a retracement in the market. So it's just that one day, it's that one battleground area. As long as price is inside that candle session, that offers a slow grind higher. The bottom of that session is 1930.67. So I would use that really as a benchmark today with regard to the markets out there. Got a question about the, says, would I kindly share with us something, Russell 2000 weekly chart, where's the next 5% move? Okay, that is great. I can take a look at the IW. Let's take a look at the Russell 2000. What I want to do here, see if I can do this. Let me see. The Russell 2000. Well, let's do this here. Let me go to the. I've only got about 10 seconds here, so I'll actually pull up the chart for the Russell 2000. And then, as we go into the break, we come back from the break. We'll take a look at it. Now, in the case of the Russell 2000. In the daily chart here, if you're watching us on Tiger TV, traveling in a sideways consolidation range out here. The top of that range is 1212. The bottom of that range is down at about the 1082 level out there. Any break to the upside or the downside, and that difference in points, which I don't know off the top of my head, that difference in points, folks, that's what will signal the extent of the move, either the upside or to the downside. Right now, the Dow is flat. S&P is flat as well. NASDAQ Composite flat. This is Steve Rhodes. This is TFNN. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow is up 9 points. S&P is up 1. NASDAQ Composite flat. Russell 2000 up $1.60 right now. Gold up $7. She's trading out at $13.17. Silver off a penny right now. Light sweet crude back 64 cents. Oh, it's good to be up and running out here. Speaking of up and running, let's go out to Philadelphia to our man John, my wingman here this morning. He's calling in to assist. John, thanks for calling. Thanks for holding. How you doing this morning?
You know what? We all have to help each other out when these technical glitch gremlins confront us.
Oh, man, nothing like going on the air and all of a sudden having the system totally freeze up. But thanks so much for assisting out there. And I know that go ahead.
You play Maverick, I'll be your Goose.
I love it. I love it. I love it. I love it. All right, Goose. Tell us what's going on. I know you wanted to take a look specifically at the Russell 2000 out there, or the IWM, so either one. And I think you're looking at it more on an intermediate term, longer term basis?
Yes, Steve. I'll be happy to share a perspective that you might be interested in.
I'm going to post your chart up here. I'm going to post your chart on the screen here. Let me see if I can get up there. But go ahead. Go ahead.
What I wanted to ask you, the IWM, the current price of the IWM is just over $113 per share. And, of course, that is just an ETF of a basket of 2,000 stocks representing the Russell 2000.
Yes.
And the Russell 2000 index itself, that 2,000 stock portfolio managed by the Russell People by the way, the Russell the Russell firm is being sold, I believe, to the London Stock Exchange, I think the LSE. But be that as it may, that index is 1140 last. So 1140 for the Russell 2000, the IWM. If you think about the raw numbers, 1130, so like a 10-point discount, just to match the two up. My question first, do you have any view strongly whether this is bullish or bearish? I'm just wondering your perspective.
So, yeah, I absolutely do have a perspective. First, what I will say is going back to, and I'll take a look at the IWM. So I've got the IWM chart on my screen right now. What the IWM did here as of most recently was it broke through a descending price channel. And that's a first indication that maybe a downtrend is in fact over. And the Russell 2000 was the first to do that. And that took place on the trading session of August the 9th. What the Russell 2000 also was doing, the Russell 2000 was the first one, in essence, to make a low, which was on August the 2nd, versus the SPY, the Diamonds, and so forth, which did it last Thursday. So the Russell 2000 was the early one to the gate. The Russell 2000, if you break it apart in between growth stocks, the growth stocks within inside the Russell 2000 are actually leading the value stocks on the way up. That's a sign, John, of if the market has made a bottom, that's a signature that you actually want to see. You know, as you and I have talked about before, the Russell 2000, is not large enough to take on the large cap stocks, but it's often a good leading indicator as to what might take place, like other correlations that are out there. So at this stage, the signal that the Russell 2000 has given to us on a daily basis is that the change in trend to the downside is over. And then that was followed up yesterday with the New York Stock Exchange when the summation index ticked up, when the price oscillator moved above zero. So those two things moving in tandem with each other is bullish. But that makes today's trading session, in my opinion, extremely important from the short-term outlook. Because with that being the case, and the bulls having gotten the ball yesterday inside the NYSE, with the Russell being the lead indicator here, and with growth stocks leading, everything else ought to fall into tandem. And so we should not see a market that moves lower today at the end of the trading session, or at least more than 335 net declining issues. If we do that, then that says, okay, everything is suspect here. In fact, so suspect that on a daily basis, I would consider jumping into the short side out here. And that's what the daily charts suggest to me. Also inside the IWM, it's a trade in a nice consolidation range, which is 13 points. So this could just simply be a retracement up to towards the top of the consolidation. Could be setting up a B to a C, an A to B equals CD down. We know off the bottom it's made yesterday so far was a Chapman Wave peak B count. You've got the MACD crossover, stochastic crossover. So the IWM is actually signaling it wants higher price. That's what I see on the daily time frame chart out there. How about can you hold on through this breakout here?
Steve, I can. Thank you.
Okay, then we'll come back. We'll get John's view on the daily chart for the IWM as well. We'll be right back, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. A flat market out here. Dow's up 2, S&P is down 20 cents. NASDAQ Composite is up 5. And we're going back out to Philadelphia to our man Goose, who's going to give us his thoughts on the Russell 2000. So take her away, John.
You know, I don't know what sound a goose makes, so I'm at a loss for that. Steve, I wanted to discuss the Russell 2000 because of all the stock indices that I look at, the broadly diversified stock indices. It's this particular indice where I can see emerging an opportunity with low risk. And the opportunity would be on the buy side. And the reason I say that is this. I shared with your audience in the Tiger's Den 2 weekly charts of the Russell 2000. First, the weekly chart starting back at the bottom in 2009, and then blowing up more closely the weekly chart starting from the 2011 bottom. And I'll just make an observation that the Russell 2000 currently at 1140, the IWM at $113 per share. Here it is August. And this particular ETF and index is unchanged for the past 10 months. In other words, last November was at this price. 10 months later, here it is at the same. And as I look at the pattern of the weekly chart, what I see is a pattern that is either consolidating prior to another run higher or one big distribution top. And, of course, we don't know what the answer is. Only time will tell.
Right.
But what I can say is that patterns that are consolidations prior to moves higher often define or often evolve into floors and ceilings. And as far as the Russell 2000 is concerned, there appears to be a good floor forming just under 1100. And when I do something very simple, looking at the very long-term charts, and perform a measured move projection, and in fact, you've done this quite often in various markets that you analyze.
Yes.
But in looking at the IWM, seeing that there was a double top, 2007 and 2011 at 870.
Yes.
And a big, massive bear market low under 350 back in 2008. Now, we broke over that double top to 870. We broke over that right at the start of 2013 and
Correct.
surged. But the measured move on that breakout is actually 1,400. Now, what I do know is simplistic calculations like that oftentimes don't occur, don't get fulfilled. But I can't tell you the number of times where very simplistic tools, when applied, leave just powerful results. And, after the fact, you say, God, how could something so simple be so accurate? So I merely share the following with you, that 1,400 remains a target, and that there seems to be a floor forming between 1,100 and 1080 on that Russell 2000. And for me, I'll be looking, if we can get it down close to that level, to actually be a buyer there with reasonably tight stops.
Sure. And, so I've got posted, I'm not sure which chart they're showing inside Tiger TV. I've got my monthly chart on my screen out here. It's included every day in my expanded edition of the newsletter, and it absolutely correlates to what you've just said. Now, I've got a measured move price projection of 1350, but let's not argue about 50 points out there. And it was a 17-year consolidation, 500-point range that it broke out of. And as you said, it's a simple tool, but perhaps one of the more effective tools, because I think one of the most important things that you and I can do, all of us as traders or investors, is try to identify consolidation patterns out there, because it's from those consolidations that you either want to try to buy at the low with a low-risk trade, as you just pointed out, or you can take a look at even adding to a position or buying into a position on a breakout there. Interestingly enough, that 1100 area that you mentioned, it comes up in a number of instances out here. One, if somebody could use as just another relatively simple tool and come back on a monthly chart, which is what I've got posted right now on Tiger TV, come back to the year 2000 and go to the March high, which was out at the price level of 614.20, it looks like, and then go ahead and tag that trend line to the 2007 high, which was out at 856.40. If you take a look at that trend line, price broke through that level there, and it came back and it tested it, and it held back in February, or was it May? It was May. The May low that was put in inside the Russell, which was down at 1082.50. So as you said, it becomes on the monthly chart out here, there's still fulfillment of another, 200 to 260 points, let's call it, to the upside. It does have some reversal signals up at the highs out here, and that really suggests that what you pointed out, which is, are we just simply consolidating here? And if those highs can be taken out, meaning it could be the March 2014 level, 12.1280. It could be last month's high, 12.1350. I close above either of those on a monthly basis. I think then the fruition of the move to the 1350, 1400 area comes right into being. Also, interestingly enough, on the weekly chart, John, is if you take a look at just putting a 50-period exponential moving average on the chart. When I automatically pull up a chart, because mostly I'm looking at daily charts or what have you, it automatically puts the 50-day exponential moving average. But when I switch over to a weekly, it doesn't know the time frame that I've just switched to, and it still is a 50 period. But interestingly enough, the Russell 2000, the week of November 2012 out there, was when price got above that line. And what's interesting, what I find interesting about that line is that when price pulled back in May, that level held. And so far, the price pullback that we've seen here, the week of August 1st, last week, that level is held as well. And right now, that price point range is 1116. So that 1100 area that you're referring to just seems to show up in a number of different spots, good enough to say, as you said, a low-risk trade. If that area is broken, then maybe it has some more meaningful impact with regard to the direction of price. And I would also say, and add maybe one last thing out here, which is that the if I take, oops, I didn't mean to do, let me see here. If I try to, why is that not working? Son of a gun. There we go. Oh, I think I can get it to work right here. The A to B CD pattern that's out here inside of the Russell. Right now it's right at where price stop was at the 1 to 1.272 A to B equals CD to the upside. That price projection was 12.1468. The actual high last month was came in at a price level of 12.1350. You got to love that, 12.1350 versus 12.1450. But because the retracement that it did here, just a 50% retracement back in the 2011 time frame, back in October of 2011. If we look at price going up this C to D leg, it's still really strong out here. And the next move would take it to the 1 to 1.618 level out there, and that has a price prediction of 1381. So the charts, to me, the way that I'm reading the charts, they say in essence the exact same thing that you're seeing out there. Looks like I might have drawn that A to B equals CD pattern incorrectly, but those are my thoughts as well.
Thanks for sharing that additional detail or set of details illuminating the significance of that 1100 to 1080 support mark. I will tell you, just as an emotional person, I was hoping that during that sell-off that week of July 28th into the Friday, August 1st, when the Dow really got clipped hard, yes, I was kind of rooting and hoping the Russell 2000 would break hard and retest that 1085 level, which was the double bottom of February and May.
Yes.
But interestingly, it only got to 1107. In other words, it was relatively less weak compared to the Dow during that sell-off. And then, of course, as we saw last week and early here Monday and Tuesday, it's recovered all the losses that occurred that week of July 28th. So I still am just watching myself. I am flat, and I'm still rooting and hoping for a decline to get down to that 1085, 1100 area. And if we could get that, I'll assess and scrutinize the volume characteristics real closely with the idea of taking a buy with a stop underneath that 1080 level, just for what it's worth.
No question about it. And that's the ideal type trade out there because it is the bottom of that consolidation, which is held very well. You've got a nice hammer candle that was produced on the May 16th trading session. So for me, that makes it relatively easy as well. And but oftentimes we don't always get the ideal trade, and so we have to make other decisions out there. I like the fact that the IWM broke its rising, or its descending price channel. Ideally, you'd see price come back and test it and reject that area. And if it doesn't reject it, then you'd start looking for that test in that, in the IWM, it would be the 108, 107.44-ish type range, 108 type area. So, I'm totally on board with, with what you also are seeing. I think today's a pretty good, will be pretty helpful for us to see if the Bears can muster up enough energy to get net declining issues below below 335, then I believe that what you're looking for as a potential trade, that comes to fruition before we actually see higher price out there. If the New York Stock Exchange continues to move higher as the markets do, if they close higher today, then we may not get that ideal trade that you're looking at.
Steve, thanks for the conversation, and whether or not the opportunity presents itself, I always like being prepared.
Absolutely, absolutely. Thanks so much for the call. So let me ask you one question before you hang up. Did you have a favorite Robin Williams movie out there, or were there just too many of them?
You know, I loved Moscow on the Hudson.
Ah, perfect. Okay, perfect.
That's a very old one, back in the youth of his acting career. Yeah, that was my favorite.
Ah, that's great. That's great. Well, we all have favorites out there, and what a sad set of circumstances last night. But there's lessons to be learned. We just have to figure out what those lessons are.
Yeah, as compared to feeling remorse over his passing, I will instead think about all the great works he accomplished during his life.
Yeah, no question, and they were great works. You know, what a great workbook that he put together. No question.
Absolutely.
Hey, John, thanks so much for calling and helping save the day.
Thanks, Steve.
You bet. That was John in Philadelphia, and that was a pretty thorough review of the Russell 2000, so I hope that helps each and every one of you out there. Let's take a look at some stocks that are moving now that I've got my system. Looks like it's back truly in full gear out here. And the stock that actually is on my screen that we want to pay attention to, we want to look at. What's interesting here is ticker symbol is TKMR, which is Techmira Pharmaceuticals. I want to punch this up on the screen. I believe that this is the entity that has come up with a potential Ebola. An Ebola vaccine or something to help combat that absolute horrible disease out there. But interestingly enough, this gapped up with volume on yesterday. The volume behind the move was 26 million shares is what it looks like. So it made that nice high. Dojiest, a high wave-ish type candle out there, 28 million shares yesterday. The low, what I find interesting about this stock chart here is the low of yesterday was 22.23, and the intra-session high so far today has been $22 even Steven. What that's left is this little island out here. Now, volume on the pullback, I'm not saying short this stock. It's only a $19 stock, and I don't recommend it. It's going to be more interesting for us. In fact, I'll note it on my chart, even though it may not show up on my screen, but we'll come back and we'll take a look at it. Now, the reason why I say that this is most interesting out here, it had another huge sign of strength back on maybe that rumor day of August the 8th out there. I think I've got the right stock here. That also had 28 million shares to the upside. So I wouldn't be in a rush here to sell. But what I would notate out here is the pattern, is that island reversal top. Now, there is nothing more bullish than a failed significant bearish pattern out here. And much like the Russell 2000 that we were looking at earlier, because on the monthly charts, it has a very significant topping pattern. So if prices get above those highs that we looked at, there's nothing more bullish, and that move to that 1350, 1380, 1400 area, wherever it is that the Russell's final destination is, before maybe it puts in a top out there. There's nothing more bullish than taking out a bearish pattern. Now, in Techmira, that's not the case, but you want to watch to see what happens at that high out here, which is on the trading session of yesterday. That level is 26.05. It gets above that, it'll be taking out its highs from well, I can't tell you where that is. Looks like right around the March highs is what I can tell you. 877-927-6648. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 20, S&P is off 3, NASDAQ Composite down 11, Russell 2000 off about 5 points right now. And, what I'll say with regard to the passing of Robin Williams is this out there. For those of you that have listened long to my show here at TFNN, you know that I have a passion, very passionate person, as are most of you out there, but very passionate, certainly about technical analysis, trade. I'm passionate about everything that I do in life, and that really the reason that is the case is that each of us are controlled each day from the moment that we wake, the moment that we go to sleep, by one question. And it's called your primary question. I don't know what your primary question is, but most people that are in a negative or a depressed state, maybe even people that aren't, quite frankly, they will have a question that basically goes something like this: what's wrong with me? Or the fear that I'm not good enough out there. And I know that the show is really financial engineered and oriented, but I know that the key to trading is psychology. It's being able to read the psychology of the markets. It's being able to read your own psychology out there. Trading is 80% psychological. The other 20% is in errors. Well, life is like that. All we're doing is emulating life with regard to our trading. My primary question when I wake each morning is how can I do more for everyone that's in my life right now? And that carries through. You see it if you've ever subscribed to my newsletter. If you haven't, go over to the homepage at TFNN.com. Click on my name. Go check out Mastering Probability. You can do that for 30 days. If you want to see passion each and every day, the expanded newsletter is about 70 pages long. Now, you don't have to look at it, but for something that you're focused on, if you're focused on some commodities, or you want to understand the trend or what's going on in multiple time frames, all that information is there. I'm very passionate about what it is that I do. It's it's why I'm passionate about even sharing and having this conversation here for a couple minutes with you out there. And the reason is because I've studied this. My first win with this took place 41 years ago. Yeah, 41 years ago, when the search to, when each of us take a look at the markets, we're just trying to solve a puzzle. Well, 41 years ago, I began trying to solve a puzzle in my life because of a sickness and an illness that my mother was going through, much similar to the way that Robin Williams and what he actually ended up dealing with out there. So that issue with regard to depression is a real serious thing out there. But if you can get somebody, yourself or what have you, to change your question to not what's wrong with you, there's nothing wrong with you. There's all kinds of great things out there. Change it to something that is more empowering. And if you can wake each morning doing that, write down a positive, empowering question, and spend your entire day focused on making those things happen. And if you do that, folks, life will get better each and every day out there. So that's that. I've got more that I could share. I could go on probably for hours out there, but I won't do that. Let's come back to the markets out here. The Dow's off 16. The S&P is down 3. I'm going to make this as easy as I can. And that is the key is going to be the net New York Stock Exchange today. Right now, you've got net decline in issues of 347. If we were to end the day like today, that would say to me that we're going to see some additional moves to the downside in the market. To what extent, I can't tell you, but what I can tell you is that the bulls will have lost the ball inside the wider swath of the market, and that's never a good thing, especially when you just got up and over that line out there. It'll be like fumbling after a kickoff, and you've got it on maybe less than the 20-yard line. Maybe you're in the red zone. You're closer to like the 10-yard line, and on first down, you fumble the ball out there. And in essence, I'll use that football analogy to what would take place in the markets today. So, folks, stay tuned. Our man Basil Chapman is up next. Then we've got the Options Hour, Daryl Martin, David White, the Tom O'Brien Show from 3 to 5, and Andy Heck from 5 to 6. So have a great Tuesday. I look forward to seeing you bright and early tomorrow morning. Take care now.